This is John Shealy of the Wall Street Shuffle and the Traders Country Club. Today's video of the day is the dollar index on a weekly chart as presented by TradeStation. Now, as you can see, the US dollar has been falling against all the foreign currencies, or most major currencies, for much of 2009. The reason I put this chart is to show you that we are approaching the lows that was made in this index for 2008. Here's the real key. There has not been basically total panic selling of the US dollar yet. We've been moving down in a lower bear market, but it hasn't been a just rush to the exits for US dollars. If we break the lows of 2008, that may change. Because if we set an entirely new low for this index sometime late in 2009 or early 2010, that may indeed speed up the selling of the US dollar. The reason I put this chart up is that if that occurs, then the buying of gold and silver will only continue. So while we sit at $1,100 an ounce in the gold market, the rise in gold prices has been that of a consistent bull market and not a spike in prices that generally accompanies panic buying. We haven't had panic buying in the metals yet, but if this index, the US dollar index, decisively breaks to new lows and there's panic selling of the US dollar, I think you can imagine what would occur to gold prices in the future. So let's keep an eye. The outcome of our test of these 2008 lows in the dollar index is going to be very important, and at the Wall Street Shuffle, we're going to keep you apprised of how that battle occurs. So this is John Shealy of the Wall Street Shuffle and the Traders Country Club, keeping an eye on the dollar index.